Welcome to Ivo Pro and Wonderslate. Topic for today's quiz is Company Accounts, Quiz 12. Question number 1. N Limited had 9,008% preference shares of 100 rupees each, fully paid up. The company decided to redeem these preference shares at par by the issue of sufficient number of equity shares. How much equity shares are required to be issued if new equity shares are to be issued at 10 rupees each? Option A, 90,000. Option B, 1 lakh. Option C, 75,000. Option D, 93,333. The correct answer is Option A, 90,000. Question number 2. S Limited had 9,008% preference shares of 100 rupees each, fully paid up. The company decided to redeem these preference shares at par by the issue of sufficient number of equity shares. How much equity shares are required to be issued if new equity shares are to be issued at 12 rupees for a premium including 2 rupees? Option A, 90,000. Option B, 1 lakh. Option C, 75,000. Option D, 93,333. The correct answer is Option A, 90,000. Question number 3. The balance appearing in the books of a company at the end of year were CRRAC equals 50,000 rupees, securities premium equals 5,000 rupees, revaluation reserve equals 20,000 rupees, profit and loss AC, Dr. equals 10,000 rupees. Maximum amount available for bonus shares will be Option A, 50,000 rupees. Option B, 55,000 rupees. Option C, 45,000 rupees. Option D, 57,000 rupees. The correct answer is Option B, 55,000 rupees. Question number 4. S Limited issued 2,010% preference shares of 100 rupees each at par, which are redeemable at a premium of 10%. For the purpose of redemption, the company issued 1,500 equity shares of 100 rupees each at a premium of 20% per share. At the time of redemption of preference shares, the amount to be transferred by the company to the capital redemption reserve account equals Option A, 50,000 rupees. Option B, 40,000 rupees. Option C, 2 lakh rupees. Option D, 2,20,000 rupees. The correct answer is Option B, 40,000 rupees. Question number 5. During the year 2005 to 2006, T Limited issued 20,000 12% preference shares of 10 rupees each at a premium of 5%, which are redeemable after 4 years at par. During the year 2010 to 2011, as the company did not have sufficient cash resources to redeem the preference shares, it issued 10,000 14% debentures of 10 rupees each at a premium of 10%. At the time of redemption of 12% preference shares, the amount to be transferred to capital redemption reserve equals Option A, 90,000 rupees. Option B, 1 lakh rupees. Option C, 2 lakh rupees. Option D, 1,10,000 rupees. The correct answer is Option C, 2 lakh rupees. Question number 6. Preference shares amounting to 2 lakh rupees are redeemed at a premium of 5% by issue of shares amounting to 1 lakh rupees at a premium of 10%. The amount to be transferred to capital redemption reserve equals Option A, 1,05,000 rupees. Option B, 1 lakh rupees. Option C, 2 lakh rupees. Option D, 1,11,000 rupees. The correct answer is option B, 1 lakh rupees. Question number 7. The balance sheet of A Limited as on 31st of December 2008 has 20,009% preference shares of 10 rupees each. On the 1st of January 2009, the company redeemed preference shares at a premium of 2 rupees per share. For redemption, it realized investments at a value of 1,60,000 rupees, book value 2 lakh rupees. At the time of redemption, balance in profit and loss account was 1,60,000 rupees. Issued at a premium of 40 rupees per share. Such a number of equity shares of 100 rupees each for the purpose of redemption as to ensure that after the compliance with the requirements of the Companies Act, 2013, the credit balance in profit and loss account would be 25,000 rupees. No. Of equity shares to be issued are, and balance transferred to capital redemption account as, option A, 1,200 shares and 80,000 rupees. Option B, 800 shares and 1,20,000 rupees. Option C, 1,450 shares and 55,000 rupees. Option D, 1,050 shares and 95,000 rupees. The correct answer is option C, 1,450 shares and 55,000 rupees. Question number 8. ALT had 3,012% redeemable preference shares of 100 rupees each, fully paid up. The company issued 25,000 equity shares of 10 rupees each at par and 1,014% debentures of 100 rupees each. The amount to be transferred to capital redemption AC will be option A, nil. Option B, 50,000 rupees. Option C, 2 lakh rupees. Option D, 3 lakh rupees. The correct answer is option D, 3 lakh rupees. Question number 9. Ajay Limited decided to redeem 10,000 preference shares of 10 rupees each at 10% premium. Balance in profit and loss account is 65,000 rupees and in securities premium AC is 5,000 rupees. You are required to calculate the minimum number of equity shares to be issued for the purpose of redemption if new equity shares are to be issued at 20% premium having face value of 10 rupees each. Option A, 4,000 equity shares. Option B, 5,000 equity shares. Option C, 3,333 equity shares. Option D, 6,000 equity shares. The correct answer is option D, 6,000 equity shares. Question number 10. On the 1st of January 2015, X Limited makes an issue of 1 lakh equity shares of 100 rupees each payable as follows. Application 20 rupees, allotment 30, final call 50. 3 months after allotment, applications were received for 1,20,000 shares and the directors refunded the excess application money. One shareholder, who was allotted 2,000 shares, paid first and final call with allotment money, and another shareholder did not pay allotment money on his 3,000 shares but which he paid with first and final call. Directors have decided to charge and allows interest, according to Table F of Schedule I to the Companies Act, 2013. The amount of interest on calls in advance equals option A, 3,000 rupees. Option B, 2,500 rupees. Option C, 1,800 rupees. Option D, 1,500 rupees. The correct answer is option A, 3,000 rupees. Thank you for watching the video. If you'd like practice this quiz, then download the Wonderslate app now. Link in the description below. If you have any suggestion for us, feel free to leave comments. If you liked the video and want to see more of it, hit the thumbs up and don't forget to click on subscribe button to get more updates of the future videos.